I guess this kind of ties into a common misconception that exists about Say right now, which is that Say is a DeFi focused chain. I mean, we started off as being a DeFi focused chain, but that is absolutely not the case anymore. Say is a general purpose permissionless chain where any type of product can get built. And we're seeing basically every single type of product that you could see getting built in crypto. It's getting built on Say right now.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Jay Jog, co-founder at Say Labs. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. For now, let's get into it with Jay at Say Labs. All right, hey everybody, I'm here today with Jay Jog, co-founder at Say Labs. Jay, how's it going today?
It has been a crazy Monday so far. Just honestly pretty crazy past week as well, but doing well all things considered. How are you doing today, Tanner?
I'm doing great. I think your week has probably been a lot crazier than mine, which we'll get into why. But yeah, I'm really excited to chat. I think there's a ton of exciting stuff happening on your guys' side that people are going to want to know about. So let's just jump in. Just by way of introduction, would you mind telling people just kind of a little bit about your story and maybe just kind of focusing on like what brought you to Web3 and ultimately what kind of brought you to creating Say?
Yeah, of course. So as you mentioned, I'm a co-founder at Say Labs. My story is that I was born in India, moved to the US when I was 4. So I primarily grew up in Silicon Valley. And when you grow up in Silicon Valley, you're just constantly surrounded by tech, right? Like every single major technology company, or almost every single major tech company back then, was based in the Bay Area. So you're just always like, friends' parents are working at these companies. You get exposed to programming super early on. Like it's just a very tech focused environment to grow up in. So I grew up in Silicon Valley. And when I was in high school, I actually met my current co-founder. So both of us were doing speech and debate back in the day. And our high schools were competing high schools. So we would occasionally meet up to do practice debates against one another. So I did a practice debate against him my sophomore year of high school. And I just kept in touch with him ever since. So yeah, I've known him for a while now. After high school, I went to UCLA to study computer science. So I became a software engineer by trade. And I ended up getting into crypto back in 2017. So 2017 was an absolutely insane time for crypto, as I'm sure many listeners will remember. And yeah, I mean, in my case, my roommate at the time, he was going through Binance Labs. So I got exposed to more of the development side from him. We worked on a couple of projects together, and beyond just like aping into random coins that a lot of my friends were doing, I became much more familiar with the development process back during those days. After that, I ended up joining Robinhood. So, I mean, for anyone who might not remember, Robinhood is the brokerage that is based in the United States. And I originally joined as a software engineer, spent almost 4 years over there, saw the company more than 10x. So it was around 200 to 250 people when I joined, was around 3,000 when I left. So just massive growth in terms of the company overall. And I got to be a part of that. And yeah, I mean, by the time I left, I was an engineering lead. And while I was there, the GameStop saga happened, which, I mean, honestly, that ended up being a lot of the inspiration for Say. So for anyone who might not recall, the GameStop saga was when there was GameStop, AMC, and roughly around a dozen other meme stocks. So these were stocks that they weren't really doing well, right? Like these companies were not crushing it by any means. But through subreddits like Wall Street Bets, which was extremely popular back in 2020, 2021, these stocks were able to start getting a lot of interest from retail. Specifically, like retail understood that these weren't like stocks that are like going to be redefining the future. But they were just really excited about it, and it became kind of a meme. And then these meme stocks, they just started taking off, right? And hedge funds were looking. Hedge funds were like, this makes literally no sense. We are going to be investing in the fundamentals of this, and we're going to be shorting these stocks because it seems like a very profitable opportunity to short. The only thing is the market is not even slightly rational. So this entire herd of retail, through Wall Street Bets, through Robinhood, they basically just started buying these meme stocks, pumping up the price. And then these hedge funds like Melvin Capital, they started getting short squeezed. So when you open a short position, you're technically borrowing a stock, and then you sell it. And then when you close the position, you need to buy the stock back. So whenever you're closing the position, you actually need to buy the stock. And if you've just lost a ton of money from a short position and you need to close that position, you actually buy the stock back, which leads to the price going up even higher, which is called a short squeeze. And a short squeeze was happening on stocks like GameStop and AMC. And this was kind of the mayhem that was happening in January of 2021, where retail was winning. And it was exceptionally good for Robinhood because Robinhood was the primary place where all of this retail activity was happening. So after all of that was happening, just one day out of the blue, Robinhood completely turned off buys. So just one day people woke up and it said, these stocks are volatile. You are no longer allowed to buy these stocks. And understandably, the entire country was upset. Like, first of all, it just came out of nowhere. There was no communication. So people were like, why did you do this? And Robinhood wasn't telling anyone. But beyond that, like, people were losing money because there was less buy pressure. So everyone was just losing money and people were unhappy. And as an insider, you would expect that Robinhood would give us some more idea of what's happening. But no, we had no idea what was happening. So that day when they made that decision, I had so many people reach out to me, like previous coworkers, friends that I hadn't talked to in a couple of years. And they were all just like, yo, man, what the hell is happening internally? My team was also asking me questions. Like, they were asking me what's happening. Do you have any more insights? And I mean, I genuinely had nothing to be telling anyone. And
Right.
when you're in an environment like that, it's just a complete sense of powerlessness, right? Like, you just have absolutely no agency. You have no transparency. You have no idea what's going on. And I mean, that was just incredibly frustrating. So after going through that experience, Jeff and we started looking into building a decentralized exchange, because one of the main benefits of doing things in a decentralized way is you get trustlessness. You don't have to trust two dudes in a room to call the shots and hope that it's the best decision for you. The entire system is transparent and you don't have any trust requirements around it. So yeah, I mean, that's why we started looking into building a DEX originally. This led to us looking into all the infrastructure we could use to build an exchange, realized all of the infrastructure was lacking, and this led to us building SEI. So SEI is a general purpose permissionless layer one blockchain where every single part of the stack has been optimized for trading applications and exchanges.
Amazing. Okay. So terrific story. I mean, that makes a ton of sense how you'd end up where you're at now. I think one question I have is, if you could bracket sort of the problems you were seeing, even in the infrastructure that led to creating SEI, how would you define the problems you guys were originally kind of setting out to tackle?
Yeah. So I guess taking a step back, from our side, we have one core thesis, which is that the exchange of digital assets is the most fundamental use case for blockchains. Every single successful application in crypto right now is either directly or indirectly a trading application. So if you look at something like Uniswap or OpenSea, so just normal exchanges, NFT marketplaces, these are very clearly trading applications because you're literally trading on them. Even games are trading applications. If you look at StepN, one of the main components of StepN is an in-game marketplace, and this is true for many other Web3 games. And the in-game marketplace is one of the biggest sources of activity for that game. So even games are pretty directly trading applications. Now, if you look at things that might not immediately seem like trading apps, like MetaMask, for example, or Aave, if you think about it a little bit more, they actually do end up also being trading applications. Like in Aave's case, you would be borrowing money so that you could then go and trade it somewhere else on chain. So indirectly gets all of its demand from trading. And MetaMask as well. You install the wallet for the primary reason of going and trading on chain. So everything in crypto right now is a trading application. And it's becoming clear that there's going to be more trading applications and more on-chain trading activity happening in the future. Cryptocurrencies and blockchains are just becoming more popular. Year over year, there's more adoption. If you look at right now versus 2018, 2019, it's just magnitudes difference in terms of the amount of activity that's happening. And beyond that, there's starting to be more and more regulatory crackdown on centralized exchanges and centralized entities. So out of that activity that's happening in centralized entities, some of that will start flowing to be happening on chain instead. So there's very clearly significant tailwinds around this as well. The question is then, how do you help trading applications become bigger? How do you help them grow? And when we were actually starting off to build an exchange, we started seeing what we called the exchange trilemma. So between decentralization, capital efficiency, and scalability, every exchange out there right now is really only getting two of the three. No one has been able to get all three of three. And if you look at Uniswap V2, for example, it gets decentralization and scalability, but not capital efficiency. This lack of capital efficiency is what led to Uniswap V3. But Uniswap V3 does get decentralization and capital efficiency, but it's not scalable. It's incredibly complicated. It's difficult for retail to participate. And then you have other alternatives like Binance. And in Binance's case, it's just centralized. So there's no decentralization aspect to it. We don't think the solution here is to keep iterating on exchange mechanisms. We don't think the solution is Uni V2 to V3 to V4 to, in the future, V5. Instead, we think the solution is to just do a complete rewrite of the underlying infrastructure. And that's exactly how innovation typically works. if you look at Web2, for example, the database industry, you started off with tools like Oracle, products like Oracle. This led to the explosion of applications like in Web 1 and Web 2 that we use today. And now we're starting to see more specialized types of infrastructure getting created. For example, there's Databricks Warehouse, which is tailor-made for AI and ML. And I mean, this is an example of application infrastructure cycles, which is basically the idea that some infrastructure gets created, which leads to new applications. Some of these applications find product market fit, and now you need to create more specialized infrastructure for these applications. And we think the exact same thing is going to be happening in crypto. We started off with Ethereum. This led to all of the decentralized applications that we use today. Most of them have not found product market fit. Exchanges have. So exchanges now need more specialized infrastructure, which is exactly the problem that Say is solving. So the core promise that we make to teams is that you can focus on user acquisition because that is fundamentally the most important thing that any developer cares about. If you're building something on chain, you want user acquisition, and everything else, like a lot of the more nuanced technical details, matter a lot less to you than how easy it is for you to acquire customers. And we focus on building the best, most performant infrastructure for these developers in these projects. And that's a little bit about Say.
Yeah, super comprehensive take. I mean, and it makes a lot of sense how it all kind of flows from that thesis as well. So, one thing I want to ask you is in some of the marketing of just the website you guys have, it's presented pretty front and center, this idea that you've created the fastest layer one blockchain. And I'd love to hear a little bit more about why that emphasis was so important, maybe in light of kind of what you've just shared as a narrative. Why speed? Why is fastest so important?
Yeah. So if you think about who the customers for layer one blockchains are, the customers are developers. And the primary thing that developers care about, as I was mentioning before, is user acquisition. And more specifically, they care about the user experience because that's one of the biggest things that a layer one blockchain or any type of crypto infrastructure can offer. So, I mean, after chatting with a bunch of developers and also looking at what else is there on the market, like when we got started, it was Ethereum, Solana. Now there's also Aptos and Sui, which are becoming, which have been bigger for some time as well. The biggest things that prevent trading applications from having a good user experience, they basically end up falling under three buckets. One of these is the time to finality. So time to finality is how long it takes for a transaction that someone submits to be part of the finalized blockchain. So if you look at chains like Ethereum and Solana, it's possible for a transaction to be included in a block and that block to be added to the chain. But then afterwards, that block might get dropped. So that's called a reorg. And then it might just not be included in the chain. It would need to be included in some other fork of the chain. So what we realized is having a chain that is reorg resistant and that has really, really fast time to finality, that like vastly improves both the normal user experience and also the market making experience. That was one of the biggest things we realized we wanted to focus on. And after talking with a bunch of teams, that was also one of the biggest issues that leads to a more clunky user experience right now. Like if you have to wait 60 seconds for a transaction to be finalized, it's hard to get recurring usage, like people coming and just doing a bunch of transactions one after the other or like repeatedly coming on, because there's just a context switch that happens. And there's been a ton of research done around this in Web2. Like if you go to any online like e-commerce site, the entire checkout process has been incredibly well optimized because they want to ensure that there's no part of the process where it takes too long, you get distracted, switch to another tab and kind of drop out of the process. In Web3, there's nothing like that that's really been done. And this clunky experience is just accepted. But that's not the world that I think is going to exist 5 years from now. Like 5 years from now, I think the world that we want to see is one where there's no difference between building an application on chain versus building it in a centralized way. So long term, we want someone building an exchange on Say to have the same user experience as building it on, is like using Binance or Coinbase. So right now, I think there's massive delta between that, but that's one of the things we really want to help just shorten the gap between them. So in our case, we focused a lot on time to finality. We ended up creating Twin Turbo Consensus, which is the fastest consensus algorithm out there. So we're able to get around 400 millisecond time to finality. For context, most other chains are a magnitude slower. Like Solana and Sui, they end up being closer to 3 seconds for global finality. And other chains like Ethereum, they're dozens of seconds, if not over a minute to actually be finalized. And Say is the only chain that's making use of Twin Turbo Consensus. So I think that was one of the bigger technical breakthroughs that we had. One of the second things that was clearly a problem was throughput. So you want to support a lot of transactions that can be processed per second. Reasons for that is that one, it helps reduce gas feeds because there's less congestion. So that leads to just a much more seamless user experience. And second, it allows more activity to be happening on chain. So you can have more complicated types of markets versus needing to just be forced to use an AMM because there's no better alternative. So in Say's case, we offer up to 20,000 orders per second. This was achieved through parallelization and building native primitives in the chain. So that helped a lot. And the third thing is around front running. So on most general purpose chains, you just can't really do anything to prevent front running right now. In Say's case, there's a native matching engine. So anyone that uses this primitive, they can build exchanges that are front running, that just are front running proof. So the way that that works is every order will get aggregated together and then they'll all get processed at the end of the block. So rather than having orders getting processed sequentially, they all just get processed at one time, which results in everyone getting the exact same price. And it prevents different orders from being placed one in front of the other. So all of these innovations, I think, have been just very, very interesting for developers. And I do think the time to finality piece is the one that is making the most significant impact on user experience right now.
Love it. That makes a lot of sense. Okay. So this is a huge week. We kind of referenced at the beginning, how you've had a crazy week these past 7 days, but maybe you can tell folks why this week is an especially exciting week. And I have a follow-up question after that, but maybe some news you might want to share.
Yeah. So on August 15th Tuesday is the public release so the mainnet launch per se. And I mean, I'm associated with Say Labs, so we're building the open source software around this. We've been coordinating a lot with Say Foundation, which is actually running the blockchain. And there's just been a ton of activity happening around the launch. If you go to Say Network Twitter, there's just a massive number of announcements, partnerships, launch details that you can see over there. But yeah, there's been this consistent question of when mainnet. Well, mainnet is tomorrow now. So I would say that's why it's been just absolutely crazy.
Yeah. Love it. Okay. So, huge day tomorrow because we're recording here today, Monday. And, one question I had for you was just kind of from your vantage point, like, are there any projects you're especially interested in or excited about? Anything that maybe has surprised you that people are building on Say? What's your take on the ecosystem and the community here?
Yeah. So, I mean, first of all, in terms of surprises, when we first got started, we thought only like exchanges would care. Like literally only like spot exchanges or like perps exchanges, etc., would care. We were completely wrong about that. So the initial set of teams that we ended up getting in touch with that started to build on Say, this was around April, May timeframe of 2022. These were all very like heavy exchange focused projects. But after that, like after our seed round announcement and definitely after our Series A as well, we started seeing just every single type of application starting to get built on Say. And we ended up realizing that this is because everything is a trading application and trading is the most general purpose type of use case or general purpose. Yeah, trading is the most general purpose type of use case in crypto. So what we ended up seeing is that, I mean, everything is getting built on Say. And I guess this kind of ties into a common misconception that exists about Say right now, which is that Say is a DeFi focused chain. Say, I mean, we started off as being a DeFi focused chain, but that is absolutely not the case anymore. Say is a general purpose permissionless chain where any type of product can get built. And we're seeing basically every single type of product that you could see getting built in crypto, it's getting built on Say right now. So some of the verticals that we're seeing social applications getting built. We're seeing games getting built. One of these games would be Fable, which is an esports league. And these games and social applications, they have very strong network effects if you're able to get some terminal or some initial number of users. But once you get past that initial traction point, it becomes like everyone starts using it, right? So we're really, really excited about these games and social applications. Beyond that, there's also things like NFT marketplaces, NFT collections. I think that the Sailors NFT is going to be minting pretty soon after launch. And then there's also rollups getting created, which was definitely pretty surprising initially, but it started making more and more sense how it strategically works out for these rollups. So right now, Say has CosmWasm smart contracts, and there's demand to be writing smart contracts in other languages on Say. So these rollups end up serving as different execution environments so that you can have computation happening off chain. And in some cases, they also want to have more specific block space for themselves that doesn't compete with block space on the base layer. So yeah, I would say those are a lot of the applications that have been just fun to see coming together. And yeah, I mean, around your last point around the community growth, I would say that it's been just much, much more growth happening than I had originally anticipated. And I think that's because there's been a lot of really interesting projects that have been launching, announcements, launches that have been happening, which has led to a lot more community interest. And I think long term, like, especially when you're getting closer to the launch, there ends up being a lot of activity and a lot of community interest. I think long term, in order to remain interesting, like how do you do that, right? Like there's been a lot of examples of projects that launched, they were very interesting at the launch, and then like a year and a half later, they've kind of taken the back seat. They're not as interesting anymore. But I think the biggest thing that needs to be focused on after the launch is just helping good developers start building. Because the only way you can get a lot of normal people to come and start using an ecosystem is if there's killer applications, like actual cool shit for people to be doing on that blockchain or on that infrastructure. And that only gets created by really strong developers who are both very strong technically and also very solid at go to market. So from the Safe Foundation side, a lot of the initiatives that they're doing are to draw in developers. For example, there's a $120 million ecosystem fund, which is commitment from market makers and investors and other ecosystem partners to deploy capital into projects that are building. So either depositing stuff on chain or also just directly investing into these projects to help them get started and to help them kind of gain the initial traction they're looking for.
Love it. Okay. So this is a little bit out of left field, but I had to ask, and really like before we dive into a few more kind of more Web3 specific questions, kind of more broadly about the space. You recently tweeted that having a potential new hire play a board game with the team is a great check for culture fit. I thought that was really interesting. So I was curious, is this something you really do? And if so, what board game are they playing? What board game should others be using for hiring?
Oh man. Yeah, I mean, so we actually have a lot of the team just together in person right now, and we're like hanging out and like playing card games last night. And I kind of had this revelation where we have culture fit interviews as part of the process, where it's just like we hop onto a Zoom call with someone and then we ask them questions. That's fine. But I think one of the things that happens a lot more in in-person companies is you end up having like these in-person kind of conversations with potential new hires. And yeah, I mean, I think if you are having these kind of in-person conversations, a really good way to just screen for if you're going to like working with someone beyond just like talking to them is by doing something fun with them. And I think board games end up being an excellent way of doing this because especially if it's a new board game that someone hasn't played before, you get to see how quickly they're able to learn, which I think generally translates very strongly into how quickly they're able to learn on the job. And I think it's also tied into how they like whether they get angry if something doesn't go their way, or like whether they're super chill, like whether they're super competitive, right? So you get to see a lot of aspects of their personality that you wouldn't be able to see just from having like a 40-minute conversation. So if you have 40 minutes, I think playing a board game with them would be a better use of time, honestly.
Yeah, that makes a ton of sense. That's fascinating. Okay, so a couple last questions for you here, Jay. You know, kind of a recurring segment on the show is if I ask you the future of crypto is blank, what would you say about the future?
I would say the future of crypto is no different in terms of user experience than Web 2. And what I mean by this is that right now there's a massive disconnect. Like trading on Binance is very different than trading on Uniswap. It's much, much cleaner to trade on a centralized exchange. And I don't think that should be the case at all. And this, I mean, honestly, it's kind of similar to the like 90s with the internet. Things start off being super clunky and only people that are like really, really passionate about the tech, they're able to go through the kind of hurdles to get everything working end to end. But then afterwards, the entire user experience ends up being cleaned up. And that's honestly the biggest thing that we're focused on from Zay's side. Like building the best infrastructure for exchanges and trading applications involves building the best user experience. And long term, I don't think there should be any difference between Web 2 and Web 3 user experience. Like I genuinely do believe that like, let's say even if Say isn't the one chain where like that ends up being massively successful around this, I do think it's inevitable for there to be a lot of improvements around the user experience. And 5 years from now, whoever is winning, I think they're going to have a much, much better user experience than what we see today.
Love it. Yeah. Okay, Jay, your most generalizable advice for founders building in the crypto space or Web3, like if you could maybe sort of take the lessons you've learned and maybe even something that if you could impart to yourself something at the start of the journey, you know, say you can go back with a time machine, what would you say to yourself that might be helpful to someone building in 2023 and Web3 today?
Yeah, I think the biggest thing is just keep putting yourself in positions where getting lucky will have disproportionate upside tied to it. And I don't think this is just advice that is general, that is specific for Web3. I think this is just broader for anyone that wants to be a founder. Um, Everyone has times in their life where they get very lucky, and obviously other times where they get very unlucky. And you want to position yourself in a way like building a successful company. You can't really, it's not like formulaic. I think it is very luck based. But what you can control is what positions you put yourself in so that when you do get very lucky, it ends up leading to disproportionate upside Versus like if you're just a lifer at Google and you've been there for 7 years, you get really lucky, then guess what? You get promoted, you get like a little bit higher cash compensation, whatever. Whereas if you're putting yourself in positions where you're constantly getting exposed to new things, you're always learning, you're always trying to build new products. If you get lucky in a case like that, it just leads to disproportionately more upside. So I think anyone that's trying to be a founder, just put yourself in positions where getting lucky will have, yeah, just a lot of upside tied to it.
Love it. Okay, Jay, last question here. What's coming up next for your team, and what is the best way for people to follow along on the journey?
Yeah, I mean, for the rest of this year, it's going to be having a lot of in-person events. So hackathons, hacker houses, just want to get a chance to get to know, like, to have everyone in the community get to know each other and to just help grow out the ecosystem. If you want to learn more, you can follow along at the Say Network Twitter. So SEINETWORK is a Twitter handle. And yeah, I mean, there's Linktree over there, Discord. So you can just follow along on all the socials and keep up to date from there.
Perfect. Jay, thank you so much. This is really exciting to get to chat, obviously kind of at a very important time in the life of y'all's project and your company. And I'm really excited we got to kind of cover what we covered today. So I'm excited to keep following along and wish you guys all the best. Thanks so much.
Awesome. Thanks, Tanner.
All right. Bye-bye.